Hey everyone, it's Sumit. So there was a ton of data that came out in the housing space, and the general punchline around all of that was it was fairly bleak, okay? But with that said, there is some indicators that things are starting to improve. But if you are in the market to buy a home, the challenge continues to be that the rate of improvement continues to be fairly slow, okay? So that's what I'm going to talk about in this video, is what is the data saying? What am I seeing from a personal experiences perspective? But before I get too far into it, don't forget to smash that like button from the YouTube algorithm, subscribe to the channel, ring that notification bell, and let's get into it. So when it comes to what am I seeing personally, and this happened in my own community for all intents and purposes, there was a family that was basically relocating to my area, and they paid $75,000 over the asking price of the home, and they made the offer sight unseen. Okay, so this should be demonstrative or provide some level of indication that the amount of supply for homes continues to be relatively low, and people are willing to go significantly over ask when it comes to buying a home. In another instance, somebody put in a winning bid offer for a home that was $30,000 over ask, and the interesting part about this particular property is that it had mold in it, okay, and it was visible mold. The selling agent had done the right thing, and they had removed the wallpaper in several areas of the home to demonstrate that there is mold in this house. The winning bid for this particular home, what they did was they went in $30,000 over ask, and they removed all contingencies, including things such as the home inspection, which is basically a representation of how much risk people are willing to take for a lot of these homes. In yet another bid, the winning bid basically came in $50,000 over ask, and this property was on a floodplain, okay? And I've talked about it in other videos. There continues to be some changes in the mathematics involved with calculating flood insurance, and flood insurance, for all intents and purposes, is slowly but surely starting to rise, okay? So these people are willing to put that to the side and write in an offer significantly over ask, and knowingly that this particular property is actually on a floodplain. In yet another instance, offers that were $40,000 over ask were effectively viewed as being insufficient and did not win the offer. Now in this particular instance, it's a little bit data pending because we're waiting for the closing of this particular home, but with that said, it'll be interesting to see how far above the winning bid actually came in, or what type of contingencies did they remove to effectively make their offer a lot more compelling. But anyway, let's take some of this personal stuff out of the way and just focus more on the data, right? So what is the data really showing? Firstly, and probably the most important thing, is the level of confidence or the sentiment for single-family home builders has gotten a lot better, okay? And that continues to improve, and that is largely due to the fact that lumber prices have been going down. Lumber prices are down over 60% from their highs. But with that said, the challenge is really this. You can't just live in lumber, okay? There's a lot of other costs that are there when it comes to effectively building a home, okay? There's labor shortages, there's copper prices, there's steel that is used in a lot of these homes. There's just all of this stuff that continues to have a lot of supply chain related issues. So while lumber prices is down 60%, and that's just an absolute dandy, the problem is that when it comes to the cost of building these homes and the prices of these homes, they're up 13%. But now that we're seeing improvements in vaccinations, reducing cases of case counts, if you will, as it relates to the global health epidemic, if you will, things are slightly getting better and better, and hopefully it will result in some level of improvement when it comes to the supply chain for the housing market. Now, these rising home prices, they could potentially reduce the amount of demand, right? Because at a certain point, people are just going to experience a significant amount of fatigue, and they're basically going to bow out from this whole thing, and that is what the data is reflecting. Existing home sales fell 2% to a seasonally adjusted 5.88 million units in August from a month earlier, and this is in line with the pending sales numbers that are reported last month, okay? Now, while this may be viewed as generally speaking a good thing that demand has come down, so if demand comes down, perhaps the prices will start coming down over the not too distant future, the problem is really this, okay? We're looking at relatively small periods of time here when it comes to the demand numbers, but if you look at annual numbers or year over year type of numbers. The problem is a lot more significant or a lot more compelling, okay? Because that data would basically reflect that there is still a significant amount of demand when it comes to houses. Year to date, home sales are up 16% from the same period a year ago and up 12% for the same period in 2019. So with demand reasonably there, input prices continuing to increase, and they're generally speaking supply related shortage, the unfortunate part around this whole thing is the median prices of homes continues to increase. The median price of existing home prices for all housing types in August was up $356,700, up 14.9% from August 2020. Now, as I said, home buyer fatigue is continuing to set in. The number of homes receiving multiple offers, 5+ offers, continues to decline. Compound that with the fact that mortgage rates are starting to increase for all intents and purposes, and it's crept a bit over 3% based on some of the Fed comments and how the 10-year Treasury yields are basically moving. So these rates continue to increase, and that is obviously going to have some level of decline when it comes to housing demand. The demand is coming down, albeit very, very slowly, and there have been more price cuts, right? On average, it's been about 12.3% of homes have experienced a little bit of a price cut. But the thing to note here is those price cuts are coming in at already elevated levels when it comes to the prices of these homes. So if you are in the market to buy a home urgently, obviously, it's a slightly different fact pattern. I encourage you to potentially stay in that home for an extended period of time, because obviously property values over a long horizon definitely go up in value. You just need to know that you're probably not getting the best deal in any given home. And if you are not in as dire circumstances, the best option that you have at this point is to just wait, right? It's to just stop, wait. These things are going to correct themselves, and likely it won't take too long for it to correct itself either. We're talking about just a matter of a few months here. This is not, as I mentioned earlier in the video, it's not as bad as the whole semiconductor thing, which is impacting the whole automotive industry. Anyway, I hope you enjoyed the contents of this video and got some value out of it. Don't forget to like, subscribe, and ring that notification bell, and I will see you in the next one.